How's it, guys? Welcome back to FX Rhapsody. Quick early trade on the USDJPY on a Monday. I think there was about 215 pips, plus that was made. So yes, I just wanted to show you the two setups that you could have taken. Before we hit the chart, just go visit my website on the bottom left corner over here, where you can find some nice trading material, reading material. For those of you that's getting started into trading, there's some nice video categories there that will help you along the way. Even as a novice trader, there's some nice strategies that you can also have a look at. Also, preferred brokers, guys, these guys are absolutely brilliant when it comes to having a reliable broker behind your side. So yeah, just go check them out. Okay, so let us hit the charts. Today is not going to be a very long video. It's going to be a sweet and short and to the point. But there was such a nice two setups, and thought I would like to share it with you guys. Okay, so we're looking at the USDJPY. We're looking at the 1 hour time frame. Again, for those of you that watched my analysis on the weekend, I've had these two little lines that we are always looking at when it comes to beginning of the week. And we're not trying to predict the markets. We're trying to react to what the market gives us. So I just wanted to share with you how by reacting to the market, you could have caught some nice little pips. On the 1 hour time frame, as you can see, price moving up, create a little gap. Now I'm going to do everything on the 5-minute time frame for you. So I'm just going to go to the time frame, or 5-minute time frame, just zoom out a little bit so we can have a look at where these setups occurred. Yeah, so these are the two lines. I'm just going to take them out just to not confuse everything or make the chart too messy. So we started off the week obviously with a gap. Okay? And then for those of you that has not watched my video on how to trade the gap, go search it, or I'll put the link in the description. You can have a look at that video as well. So as you can see, price started out on a gap, okay, price moving up. And then obviously, as I explained before, price returns to this gap. There's a little void that's formed, and then price comes and fills that void in the gap or in the market. So how could you have taken that trade, and where, a lot of people asking, where are you taking yours? Let's say, for instance, like this scenario here, where do you put your sell, or where do you place your sell for this gap? It's relatively quite simple, using the Fibonacci from that swing high to that swing low. Okay, so we have a swing high, we have a swing low, price coming back into the 62% area. Okay, between the 62 and the 79% area. It's nothing fancy, it's nothing difficult. It's just plain Fibonacci retracement. So that is where you place your sell, just taking out the Fibonacci. So that's your sell area. And then where's your target area? Your target area is obviously this void that gets filled. Okay, so you have a sell opportunity that you take there. Target is going to be around about 77 pips, between 70 and 80 pips. That is your first sell trade. All right, so that's as easy as, you cannot simplify trading even more than that. So that is a sell trade. Now, with this filling the void, what are we looking at? We're looking at a retracement, because we had a nice movement to the upside. Okay, I'm just going to leave this. We had a nice movement to the upside. What normally happens when there's a push to the up or to the down, there's a retracement happening. Where do you measure, or how do you measure retracement? Again, Fibonacci, guys. So we have a low over here. That's your low area, and that's your high area. Okay, so we have already two areas that we use our Fibonacci. So you have your swing low, excuse me, and we have our swing high. Okay, so if you did not trade the gap, if you were not familiar with the gap, and you were only looking at this, that's already one setup again. So now we're looking for this retracement to the 62%. And as you can see, it fits very nicely with the price filling that void. I mean, it's just more and more confirmation. So you have your sell opportunity, the first 70 odd pips that you could have caught, selling down to this gap. But we're also looking for this buy opportunity, okay? Because we had a nice push to the upside. We have a retracement to the 62%. And look at that. Again, that's where you enter, buy that void right there, okay? That's your entry area right there. And then, and as you can see, you know, just zooming out, price just shot up to the upside, okay? Just gonna do that, shot up to the upside. Okay, so where's your target now? Where's your target looking at this area? So now we go to the left and we look for any areas in the market for fair value gaps. Over here, we saw a break of structure right there. Okay, just zooming in. So that's a break of structure. There's all these fair value gaps in the market. We look at this first break of structure, created a imbalance in the market. That's a fair value gap that was created. And for those of you that watched my fair value gap videos, price tends to retrace back to these areas. We move sideways, and we move sideways, and we go sideways, because like I said to you, I keep those fair value gaps because price retraces back to that. So that is your entry and that is your target. It's as simple as that, guys. So you have already a 60, or let's call it a 70 odd pip sell, and then after that target hit, you look for your buy opportunities for that retracement, and then you buy up to where? You buy up to this gap here. So that's another, what, 140 odd pips. So you're looking at over 200 pips in one day, one currency pair. Not complicating anything, it's just simplifying it, right? So hope you guys caught this, and if you did not, go back in your charts, back test it. I always say to people, go back test. How do you see these things? And this is all these questions you get by back testing everything. Look for these gaps in the market, look for retracement areas, look for fair value gap areas. If you go back in your charts, okay, do exactly the same. Go look for these areas. Start a previous week, start it off, you know, highlight these areas, see what price did, and then what you would have done if you reacted to the price, not just predicting it, but reacting to it. And look for these areas in the market. And the more you backtest, the better you will get. So guys, that's all from my side. I hope you enjoyed this little, you know, let's call it, I'm not going to say analysis, but this little two setups that occurred yesterday. Hope you enjoyed this video. And if you did, don't forget to hit that like button, hit the subscribe button, hit that notification bell. Show me some love by hitting that super thanks button. And guys, let's see if I can make some more videos this week. So guys, I hope you have been having a wonderful week. Stay safe and happy trading, guys.